On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Morning, team. Hope everyone is well. I wanted to talk a little bit and share a few thoughts on the local reporting season, which has started, but it really ramps up next week. And next week and the following week, we will get a good look at many of our largest listed corporates. We'll be able to put their earnings and their numbers under the microscope and see how they're doing and where they are headed. So this will give us a good feel for how corporate New Zealand is looking. What should we expect through this reporting season? Will there be any cause for optimism? I'll try and answer a few of those questions. It has started a little more slowly than usual this earnings season. We've only seen a handful of releases so far. Normally, we would have probably seen more. This week in years gone by would have been a much busier week than it is. But for whatever reason, in 2024, a lot of businesses have chosen to schedule their earnings announcements for those last 2 weeks of August. So rather than everything being spread over probably 3 weeks, it's all been crammed into those last two. So there'll be plenty to watch next week and the following week. Will it be good? Well, the share market has rebounded over the last few months, hasn't it? So maybe that tells us something. The NZX 50 index has risen more than 6% from the lows about 3 months ago, and July was actually the strongest month for the market since April 2020. Got to go all the way back to when we were rebounding and bouncing back from that COVID period with the lockdowns and so forth more than 4 years ago. However, I wouldn't necessarily expect that same optimism or positivity that we've seen in the share market in terms of its performance to be reflected in the earnings releases that we see over the next few weeks. Many of the results that I'm expecting will probably make for fairly somber reading. And the reason is they will cover the 6 months to the end of June. So the first 6 months of this calendar year. And that did prove to be a pretty difficult period for the New Zealand economy. The economy contracted further on a per capita basis, so it's continued that trend of contraction that we've seen for the past 18 months now. The last 6 quarters that we've got GDP data for, and we haven't got the June numbers yet, they will come out next month in September, but the March numbers and the 5 quarters before that, in per capita terms, per household terms, we've been in contraction. So it has been a pretty difficult period. Also thinking about that first 6 months of this year, house prices fell in 4 out of those 6 months, and mortgage rates increased to 16-year highs, sitting at the highest since 2008. And at the same time, unemployment has pushed steadily higher. So we got some unemployment figures last week, wasn't it? And what did it go to? 4.6%. That's the highest in more than 3 years. So it hasn't been a great period across the New Zealand economy over these first 6 months of 2024. And that backdrop will have ensured that businesses exposed to the economic cycle, and particularly those that are quite reliant on discretionary spending, they will have had another challenging period. They would have done it fairly tough. Having said that, since the books were closed off at balance date on June 30, so over these past 6 weeks or so, we have just seen a few signs of improvement. Mixed, yes. Patchy, yes. But still, they have been there. If you look at the ANZ Business Outlook survey for July, that saw the biggest jump in confidence in 9 months, and it was construction and the services sector that reported the sharpest improvement in activity. And that does support some of the anecdotal evidence that I'm hearing and seeing and talking to people about evidence of slightly improved conditions over the past month. Now, that is not across the board, but from some industries and from some businesses and parts of the country, I am hearing that things have lifted a little bit since July and into August. So while that's patchy, there could be a few reasons for those very recent and very early green shoots. It could be further falls in inflation. Inflation's obviously come down to 3.3%, getting there, not far away from the top of that Reserve Bank target range. And most people expected the inflation rate to start with a 2 the next time we get some figures, which will be in October. We've also had some long-awaited declines in mortgage rates. Some of the banks have reduced mortgage rates once or twice over the last several weeks, even though we haven't seen an OCR cut just yet. And I'm recording this on Monday, 2 days before the Reserve Bank decision. So with a bit of luck, they will cut the OCR this week. We'll wait and see. But we've seen falls in mortgage rates anyway in response to falls in wholesale interest rates. And that's been something that has been a global trend, and our banks have responded to it. So that's probably been taken positively. Or it simply could be that people are thinking, well, it's been such a tough period and things can't get much worse, that we've seen a little bit of a bounce in confidence. So, look, who knows? But if there are early signs of recovery that we're observing over the very recent period, I don't think you'll see much evidence of those in any of these earnings releases, or at least not in the hard numbers. You might see it in the outlook commentaries that you get from the management team about where they see things going, or how trading conditions have been since they closed off at balance date. But I don't think you'll really see too much of it in the numbers. So analysts will be hoping that the future does look brighter, because those earnings forecasts for the 2025 financial year, next year, still reflect a fairly solid rebound. Anyway, there will be plenty to watch over the coming couple of weeks, and next week when it all kicks off, we've got a lot of the market heavyweights set to announce results. So Contact Energy, Auckland Airport, the NZX itself, NZX the company, Spark, they are all part of next week's lineup. We will also get a couple of releases from across the Tasman that I will be watching closely. Westpac and ANZ Bank are both announcing quarterly releases, quarterly earnings releases, and they always offer insights into the state of play here in the New Zealand economy, because they do separate out the New Zealand operations from the Australian operations. And while New Zealand, for both of those banks, is a lot smaller relative to what they're doing in Australia itself, we do get a good feel for the trends that we're seeing across the New Zealand economy from the perspective of some of our major lenders. So those are worth keeping an eye on too. Also next week, other companies that I will be watching out for, Freightways and Port of Tauranga. They were always interesting to watch, good barometers of economic activity, so they will be in focus. Another two that I think will get a lot of attention are A2 Milk and Fletcher Building. And I think A2's result is out on Monday. Fletcher's might be a little later in the week, Wednesday-ish, maybe Thursday, I forget. But these two will be closely watched, because they're at completely opposite ends of the performance spectrum when you rank the top and bottom movers of the year. So A2 is near the top of the tree. Its shares have risen more than 60% this year to date, up more than 60%. So it's sitting at 3-year highs. And in contrast, Fletcher Building has slumped by more than a third. It's down about 34, 35% this year. And it's been trading at levels in recent times that we haven't seen for more than 2 decades. I think you've got to go back to 2002 to find a time when the share price was last as low as it has been recently. So it'd be really interesting to see what the results look like for those two, given how dramatically the share prices have moved, one up, one down. Beyond those, there will be plenty more to watch, and it's not just next week, it's the following week as well, where there'll be even more companies to monitor. The listed property sector is another sector that I'll be keeping an eye on, potentially nearing an inflection point. You've got interest rates that are set to fall and probably keep falling through to the end of the year and into next year. One would hope that the beaten up commercial property sector might respond to that. You might see a bit more stability, a bit more confidence. So listed property, I'm hopeful that they might have a brighter period ahead. The electricity sector as well, that will be in the spotlight. You've got soaring wholesale power prices at the moment, a lot of media attention on what's going on there. So I'm sure their profits will be very much under the microscope. I think their profits will look good, which probably won't do them any favours right at the minute. More broadly, look, there are a few bright spots amongst the gloom, interest rates being the key one. Hopefully that does give us a bit of a confidence boost, a bit of a shot in the arm. But at the same time, this reporting period will cover a time when the economy was pretty close to that sort of maximum pain. So don't expect great results, even though we've got a few things we can latch onto now that might look a bit better for the future. Even though the market has taken a little bit of a turn in the right direction and it's lifted, I think you still will get a fairly ugly set of results. But brace ourselves for that is what we should be doing. But at the same time, I think we need to have some hope that you will get some encouraging comments about how the balance of this year is shaping up and looking ahead to 2025. Because remember that markets always look ahead. As investors, we shouldn't be too focused on the rearview mirror. How did last year look? Markets will always factor in what they see coming rather than what is behind them. And with a bit of luck, the period that we're moving into will look a lot more prosperous than the one that we're just coming out of. So lots going on. If you're interested in hearing or reading more about any of those companies and what we think about them, what they're doing, results, best ideas, what to buy, what to sell, got loads of that. Just get in touch with your advisor and tune in here again to hear more of my thoughts. All right. Thanks, team. We'll talk again soon.
For more insights, visit craigsip.com.